Robotics and Automation Stocks. A robot in the past were used mostly in industrial application. Robots are now being employed for security, healthcare, air, aerospace, food and beverages uses, and education. Most industries are starting to rely on automation to dramatically improve their efficiency. Amid these advances, market research analysts have forecast the robot market will expand to 20 $214.7 billion by 2030, growing at a compound annual growth rate of almost 23.1%. With such an increased investment opportunity, robot and automation stocks are represented by ROB, or Global Robotics and Automation Index (ETF), an exchange traded fund (ETF), uh, have outperformed the broader market. The ETF has delivered a total return of 5% over the past 12 months, higher than the relatively flat performance of the S&P 500 index, up to 0.3% in the same period. 2.3. Here are the top 3 robotic stocks in each category: best value, the fastest growth, and the most momentum. The market performance number above all the company stock data in the table below of the April 24, 2023. Best value robotic stocks. There are the robotic stocks with the lowest 12-month trailing price to earning P by E ratio, because the profit can be returned to the shareholders in the form of the dividend by buybacks. Low or P by E ratio shows that you are paying less for each dollar for profit generated. But such stock are also could turn out to be classical case of the value trap, a stock that attract investors looking for bargain because it seems inexpensive related to a historical valuation multiple to stocks and versus industry peers. Uh, but that many continue to languish or drop further after the investor or buyer share in the company. Best value robotic stocks. So Azenta Inc. rebranded from Brooks Life Sciences Services and Products. Azenta provide analytics sources, logistics information for scientific sample exploration and management. Azenta P by E ratio is reflective of its slowing organic revenue growth, which declined 1% of the hour in the first quarter of 2030. At the same time, Azenta announced an accelerated sharp share repurchase agreement valued at $500 million that is to be complete by the end of the third quarter, signaling that shares might be undervalued at these levels. Qualcomm Inc., the global semiconductor and telecommunication company that design and market wireless communication products and services. Despite its size, Qualcomm is immune to the macroeconomic strain, with the first quarter revenues falling 12% and earning before taxes dropping 39% year over year. G and Co. The company is a global leader in the production of the equipment related to the farming as well as construction, forestry, and earth moving and lawn, turf and care. It also has a large suite of digital products that provide accessibility and monitoring for consumers' machines. Strong demand leading to the higher shipment and realized prices propelled it there to deliver over year net sales that were by 34% of earning per share that struggled 124% of the first quarter. Their forecast is 2030 net income would be in a 80.75 billion and 9.25 billion dollar range, rising from 7.1 billion in 2022. the fast growing robotics stock. There are the top robotics stock as ranked by the growth and model that scores company based on the 50-50 ways of their most recent quarterly our year percentage revenue growth and the most recent quarterly year over year growth.